Greetings, ladies and gentlemen, all across YouTube. In today's video, we're gonna embark on a quest to learn how to fill out those pesky tax forms for health savings accounts. But better yet, you're gonna learn how taxes actually work for HSAs and how it all relates back to your tax return. You're not gonna wanna miss this. How's it going, everybody? My name is Mike the CPA, and on this channel, we teach finances, investing, and taxes. Without further ado, let's unravel the mystery, which is the HSA and how the tax implications work. The example I'll be sharing with you in today's video is for a person who files single and who contributes the maximum amount to their HSA for tax year 2019. The rules are pretty much the same from year to year to year. The only thing that changes is the max contributions amounts, typically. There haven't been any major rule changes to HSAs in quite some time, not to my knowledge. Now, if you file married filing joint, don't worry, you can still use this example. It's pretty much the same process as if you were filing single. It's just the numbers will be a little bit larger. So follow with me now, follow along. And I know you might have questions, so feel free at any time to engage in the comments below, and I'll do my best I can to get back to you with your questions. So in this example, what you're seeing is a common form. Now the form number up here, it shows 2020. Just pretend this says 2019. I couldn't find the 2019 form to do this on, but just bear with me. The form you'll receive from the bank or the custodian, the trustee of the HSA, is going to be form 5498-SA. That's what you can expect to receive in the mail at some point. Hopefully it comes before your tax filing due date. Sometimes it doesn't. So a lot of times you'll have to jump online to their website to access this earlier if they're slow on mailing it to you. I've had that be an issue for me several times. But the banker's name would be up here. So ABC Credit Union, just a general name that we're using for this example. And the participant name, the taxpayer in this example, is Chipper, of course. Well, let's just pretend that you've contributed for 2019. Remember, just pretend it's 2019. The max amount of roughly $3,500 to your HSA for that tax year. Now, there's going to be a twist because this form shows the total amount of contributions that went into your account. It doesn't necessarily mean that you made all these contributions. Your employer could have made some of these contributions as well. So in this example, the employer is of that $3,500, we're going to assume or pretend the employer gave us $1,000 of that, and we put in the other $2,500. Okay, got it? So you put in $2,500, your employer put in $1,000. So this form really, what it's primarily used for is showing you the total contributions that went into your account, whether you made them or your employer made them, or or whether or not somebody made those contributions on your behalf. That's a possibility as well. The form also displays the fair market value of your HSA account, so which really isn't that important, but just pretend it's $15,000 in this instance. If you happen to roll something over, which we're not doing in this example, then an amount would show up here. The form also covers, as you can see here, the Archer MSA account, the MA and MSA account. But primarily what I've seen in practice of public accounting is usually when I see this form, it's usually associated with an HSA. Now let's move over to the next form you'll probably get from your HSA custodian. Just like the last form, in the top left corner is the name of the HSA custodian, and then down here is the recipient's name. That would be you, the taxpayer. In box 1, we have the gross distribution amount. So this is just representing the total amount of distributions you took out of your health savings account during the year, whether you spent that money on prescriptions, doctor's visits, co-pays, things like that. In box 3, we see distribution code 1. Now this code is really important. If it's just a normal distribution for qualified medical expenses, then it's going to be code 1. And what that means is that that money that comes out of the account, because it's a normal distribution for qualified medical expenses, this is telling the IRS saying, hey, this is qualified, this is a qualified distribution, so do not tax me on it. So you take the money out and you have no tax consequences because of it. If the money was used for non-qualified distributions or something else, you would have a different code here. You can see the instructions to this form if you want to learn what the different codes mean. But generally, when you just take a normal distribution for qualified medical expenses, distribution code 1 is going to show up here. Now, if you have earnings on any excess contributions you have, they'll also show up here. And of course, if a person passes away in box 4, that would show the fair market value of their account at their date of death, which is why that information might be important. All right, the third place you might see information regarding your HSA in terms of contributions is your W-2. Now, your W-2 is never going to represent any distributions you take, but it can show how many contributions you make if your HSA is tied in with your employer. And when I mean tied in with your employer, I mean that you elect to have some money taken out of your paycheck to be contributed to an HSA, or if your employer agrees to contribute money directly to your HSA for you, that's when you'll see this information materialize for you at the end of each year on Form W-2. And it's going to show up in box 12, one of these box 12s, and it's going to be code W. That's the code for HSA. And when you see the total amount, and like we said in this example, $3,500, that's the total amount of contributions that were made to your HSA. Now, as you're about to see, when we go to the actual tax form now, the employer only put in $1,000 of that, where you decided to personally contribute $2,500 of your own money throughout the year. And so let's go over now to the first main tax form when it comes to health savings accounts. But before we move on, let's do a really quick review. Okay, how many tax forms may you receive from the HSA custodian or trustee? How many? 2. What are they? The 1099-SA and the Form 5498-SA. What do those forms summarize? Distributions and contributions. And where else might you receive information regarding your HSA? Your employer on Form W-2, Box 12, Code W. The first primary tax form for filing taxes for your HSA is Form 8889, and that's the Health Savings Accounts form. And what you're looking at is a 2019 form, and it really hasn't changed for quite some time. So even when you're doing this in 2020, 2021, I don't expect this form to change much, if at all, even at that point. But, just make sure you read it, make sure you comprehend it. I'm just going to quickly go over this with you. I'm not going to read every line, but in this example we're using, remember we pretended that we're filing single and we contributed $3,500 total, right? Or $3,500 in total contributions is what went into the account. How much of that money did we personally put in? $2,500. So on line 1, you're just marking self, because self only, that maybe you're filing single, your high deductible health plan just covers you. So that's line 1 or box 1. If you have family coverage, then of course you'd mark the family box. And I'll show you guys the instructions here in just a second so you know where to go to learn more. But on line 2, that's where you enter the total amount of contributions you made, not what your employer made. On line 3, if you're using software, it should automatically generate that amount for you. But if you're eligible for coverage the full year, and if you're single, for 19, the max amount was $3,500, which is why we're putting $3,500 here on line 3. Line 4 really deals more with Archer MSAs and MSA plans altogether. If you don't have one of those, then line 4 would really not apply to you. Line 5 is really just taking $3,500 minus 0, which is $3,500. Then it keeps carrying down to line 6, okay? And then nothing really changes on the form until we get to box 9 or line 9, where it says, now we enter the employer contributions made to your health savings account for 2019. And in this example, we're saying that your employer gave you $1,000 for the year for your HSA. So we have to enter that amount, whatever that amount is, in box 9. So now what we do is we take the total amount of contributions, or the max amount of contributions for a single filer, we subtract out the portion paid for by our employer. And that leaves us with $2,500. That $2,500 is, in fact, the amount of our HSA deduction we can actually deduct on our tax return, which we're about to see next. The last part of the 8889 form really just deals with distributions. And on 14A, what it's going to have you list is the total amount of distributions for 2019, which you're going to get from your 1099-SA form, which we showed you at the start of this video. And the example we were using, our example is $500, right? So we're just going to put $500 there. 14B is going to be 0, so we don't have to worry about any of that. And that really deals with, if you're dealing with earnings on excess contributions and things like that. So that totals us up on line 14C at $500. Line 15, that's just the form's just wanting to know, okay, of your distributions that you took out of your health savings accounts, how much was it for qualified medical expenses? Because remember, if it's not qualified, then we get hit with a 20% tax penalty, which you're seeing down on line 17 or line 17A and line 17B. But in this case, all of our distributions were qualified, right? We're going to keep things simple for this example. So you just put $500 here, and voila, you're going to have 0 taxable HSA distributions on line 16. And that's all there is to it to filling out this form. Now, there are a couple nuances if you're married or if you both have an HSA plan or one of you qualifies and one of you doesn't. Let me just touch on the instructions real quick before we move on to the next tax form. Based upon your circumstances, there may be some tricky parts to this form. And some of the trickiness or complexities can come in on line 3. It can attack you on line 4, or it can attack you on line 6. If there's something going on that is outside the norm. Now, I say this is outside the norm because I've been in public practice now for 10 years. And never once have I seen these other issues pop up. But I know everybody's circumstances when it comes to taxes is different. And so there's these circumstances out there. So if you're going through this form and you're reading it line by line by line, and it doesn't follow this example, and you're just not sure what to do, the best place I can guide you is to the instructions themselves. Because why do I say that? Because how do you think accountants, professionals who do this for a living, how do you think they know how to do this? They read the instructions. I know, rocket science, right? But honestly, that's what we do, because we don't know all this. None of this stuff is taught in school. None of it. Like very rarely. Maybe if you do a master's in tax, but generally you're not working with actual tax forms. So if you go to the instructions on page 3 of the instructions, you're going to start to see some guidance on how to fill out line 3, how to fill out line 6, because these are by far some of the more complicated areas to fill out. And you can see, there's a flow chart, there's a worksheet, it gets pretty complex. But this is guidance describing how you would go about filling that information out. And I don't want to hijack this whole video on this because it would take far too long, and I have never seen somebody with this circumstance. But if you're using tax software, if you enter the right information in terms of how long you were eligible for the HSA plan, if your spouse was eligible for a plan, this, that, and the other, then you can probably avoid all this. But if you really want to know how it works, you need to come to the instructions to make sure you're doing this correctly if you're not certain. Or obviously consult with a professional who would help you do your taxes. But this is where you would go to learn more. Okay, ladies and gentlemen, here we are in Schedule 1. This is the additional income and adjustments to income. I just want to touch real briefly. There is a lot of confusion when it comes to HSA. These are questions I get commonly, whether I'm in practice or whether it's over YouTube. These are common questions I get. So people often will get HSA deductions, which come from HSA contributions, confused. They think it's part of the standard deduction, which it's not. So an HSA contribution or deduction is not a standard. It has nothing to do with the standard deduction. It also has nothing to do with itemized deductions if you itemize. An HSA contribution is an adjustment to your income. And so that's why the amount you contribute, which in the example we were looking at, let me zoom in. Hopefully you guys can see that. Here we go. On line 12, let me make this full screen. Sorry, no wonder you can't see it. Okay, here we go. So on line 12 of this form right here, the total amount of contributions that are deductible by you, which is what you put in, would show up here. So in this case, it's $2,500. And of course, if you were doing a family plan, if you and your spouse or partner both had HSAs, then that total would be even larger, right? More likely than not. But just wanted to clarify that an HSA contribution is an adjustment to income. It is not standard deduction. It is not itemized deduction. I think people get that confused is because your health insurance is that what you pay for your health insurance out of your own pocket. You could potentially itemize that if you're able to itemize. But your health insurance, the premiums you pay on that, that is not a qualified medical expense by an HSA. I want to clarify that right now. The premiums you pay for your health insurance is not considered a qualified medical expense for the HSA. It's only things like what you pay for your over-the-counter prescriptions. I mean, behind the counter, whatever terms they want to use. Your co-pays, your doctor's visits, your dentist visits, surgeries, things like that. Which, if you guys have not seen my HSA video that covers all the rules, and make sure you check that out. Make sure I link that below, because this video is actually part of a series. So there's going to be one more HSA video I'll be producing to wrap up the series. Well, finally, ladies and gentlemen, we've made it to the last tax form in this video, and hopefully you've been able to level up on your tax skills after taking this HSA tax prep quest with me. So I appreciate that if you've stuck with me this long. So everything on the 1040 is basically, the 1040 is a summarization page of a person's tax information for the year. And so let's see how this all plays out now, knowing what we know about the HSA. So the only part of this I filled out is really just the numbers part, just because it's an example. So in this example, let's just say you filed single and you made $50,000 in wages, you had $2,000 in interest. So your total income is $52,000, right? That's what that adds up to. So, but now we have our HSA contributions, which is what? It's an adjustment to income. An adjustment to income means we get to reduce our total income for taxes. So we're able to take $52,000 and subtract the HSA contributions from it of $2,500. And line 8A is the total adjustments to income. Now, in this example, I'm only showing you one HSA. If you had other adjustments to income besides that, then the total would be even larger, which would come through here. But I'm trying to keep things simple, just showing you one piece at a time. And so you have $2,500 coming through here. That gets your adjusted gross income to $49,500. Now, the next thing you get to do is subtract the standard deduction from it or itemized deduction. Now, I'm using 2019 forms as an example. So in 2019, if you use the standard deduction, then it was $12,200. So your taxable income now is left being $37,300. And the HSA contribution took away $2,500 from that, right? That's how that helps you. And the way it works, though, let's just say, now I'm just making this number up, okay? But let's just pretend you were in the 20% tax bracket. So what that actually means, that $2,500 contribution tax savings means not that you save $2,500 in taxes, but it's whatever your tax rate is. So if your tax rate was 25%, I'm just making this up, then that means that contribution of $2,500 gave you a real net tax savings of $625. Money that you would have had to give to the government, but now you don't have to because you put money in that health savings accounts. So that's how that works, guys. I hope you got a lot out of this video. Hopefully it was easy to follow, but hey, I look forward to reading your questions and your comments down below. Now, I realize I'm making this video outside of tax season, so you might want to save this for later. You might want to mark it as your favorites or put it in a playlist or something like that so you know where to find this. But obviously, if you come back to my channel, you can pull this up anytime and check it out. But thank you so much, everybody, for allowing me to share this information with you. If you enjoyed the video, if you do me a favor, if you drop a like, if you share this video with others, if you engage in the comments, all those things really helps YouTube promote this video even more. But more importantly, it would mean the world to me if you subscribe to the channel, if you join our community. I try to produce new educational videos on a weekly basis. I've been doing this for about 4 years now, and I'll have a lot more videos coming. So nonetheless, it's been a blast. I'll see you guys down in the comments. Live life uncaged, and I'll see you in the next episode. I love y'all. Peace.